Have you ever considered what causes a stock's value to rise or fall? What variables influence the stock market's ups and downs? In today's video, we're diving deep into stock fundamentals to answer these questions and more. So, whether you're a seasoned investor or just getting started, here's the big question we'll explore. What exactly are stock fundamentals and why are they crucial for your investment success? Stay tuned because by the end of this video, you'll have a solid grasp of the foundations that drive the stock market and be better equipped to navigate your way to financial success. Alright, without further ado, let's embark on this enlightening journey and uncover the secrets of stock fundamentals. Are you ready? Let's dive in. To understand stock fundamentals, we first need to grasp the concept of stocks. A stock is a financial instrument that signifies ownership in a company represented as equity. This ownership is structured per share, and individuals who possess these shares are commonly known as shareholders or stockholders. So, when you acquire one or more shares of stock, you are essentially obtaining a proportional stake in a company's total assets and expected future profits. Stocks represent ownership in a company, and their value is influenced by two primary factors: fundamentals and market sentiment. Today, we're focusing on fundamentals. Now, what is fundamental analysis? Fundamental analysis, or FA, assesses the inherent worth of security by scrutinizing interconnected economic and financial elements. Inherent worth is the value of an investment determined by considering the financial status of the issuing company and the existing market and economic circumstances. Fundamental analysts investigate a wide range of factors that can influence the value of security. These factors encompass macroeconomic aspects such as the overall state of the economy and the conditions within the industry, as well as microeconomic factors like the proficiency of the company's management team. Fundamental analysis is commonly conducted by starting with a broad assessment of the market and then delving into specific details to pinpoint securities that might be undervalued or overvalued by the market. Analysts typically follow this sequence: 1. Evaluating the overall economic conditions, 2. Assessing the health and potential of the particular industry, and 3. Scrutinizing the financial performance of the company that issues the stock. This approach helps them arrive at an equitable market value for the stock. Sources of fundamental analysis. Fundamental analysis employs publicly accessible financial information to assess the worth of an investment. This data is documented in financial statements such as quarterly and annual reports and filings like the 10Q or quarterly or 10K annual. Additionally, the 8K is informative because public companies must file it whenever a significant event occurs, such as an acquisition or a change in top-level management. To illustrate, when conducting a fundamental analysis of a bond's value, you would begin by examining economic factors like interest rates and the overall economic climate. Subsequently, you'd evaluate the bond market and utilize financial data from similar bond issuers. Finally, you'd scrutinize the financial data from the issuing company, considering external factors such as potential alterations in its credit rating. You could also review the 8K, 10Q, 10K, and the issuer's annual reports to gain insights into their activities, objectives, and pertinent issues. Fundamental analysis hinges on metrics like a company's revenues, earnings, anticipated growth, return on equity, profit margins, and other data to determine its intrinsic value and potential for future expansion. Intrinsic value. In stock fundamentals, intrinsic value is a crucial concept. It represents the inherent or true worth of a stock or an entire company, irrespective of its current market price. Understanding intrinsic value is fundamental to making informed investment decisions. Here are some key points about intrinsic value in stock fundamentals. Calculation. Intrinsic value is determined through various methods, the most common being fundamental analysis. Fundamental analysts examine a company's financial statements, including its balance sheet, income statement, and cash flow statement, to assess its financial health and performance. They consider factors such as revenue, earnings, growth potential, and the quality of assets. Long-term perspective. Intrinsic value focuses on a company's long-term prospects rather than short-term market fluctuations. It considers the company's ability to generate profits, sustain growth, and create shareholder value over time. Comparison with market price. Investors often compare the calculated intrinsic value with the current market price of a stock. If the intrinsic value exceeds the market price, the stock may be considered undervalued, potentially presenting a buying opportunity. Conversely, the stock may be overvalued if the intrinsic value is lower than the market price. Margin of safety. Many investors use intrinsic value to establish a margin of safety. This means they aim to buy stocks when their market price is significantly below the calculated intrinsic value to reduce the risk of capital loss. Subjectivity. Calculating intrinsic value is not an exact science and can vary depending on the methodology and assumptions. Analysts may arrive at slightly different intrinsic value estimates for the same stock. Influence on investment decisions. Intrinsic value is pivotal in investment decisions, particularly for value investors. Investors who follow this approach seek stocks trading below their intrinsic value, believing the market will eventually recognize and correct the undervaluation. Market sentiment versus intrinsic value. It's important to note that stock prices in the short term can be influenced by market sentiment, speculation, and various external factors that may not necessarily reflect the intrinsic value. However, over the long term, fundamental factors tend to impact stock prices significantly. In summary, intrinsic value is a fundamental concept in stock fundamentals that represents the true worth of a stock or a company based on its financial fundamentals. It is a valuable tool for investors seeking to make informed decisions and identify potential investment opportunities in the stock market. Understanding how stock fundamentals operate. In its broadest sense, fundamental analysis examines any data anticipated to impact a stock's price or perceived value. This entails delving into the core aspects of a company's operations. Fundamental analysis is primarily concerned with constructing a company's comprehensive profile, pinpointing its shares' intrinsic value, and making buy or sell decisions based on this information. Now, let's explore some key indicators that analysts commonly use to evaluate a company's fundamentals. Cash flow is one of the critical metrics. It tells us how much money flows in and out of the company. Positive cash flow is a sign of financial health. Next, return on assets or ROA measures how efficiently a company uses its assets to generate profits. It's a crucial indicator of profitability. Next, we have the debt levels. Conservative debt levels indicate that a company is not overburdened with debt, which can be risky. A strong balance between debt and equity is often desirable. Next is profit retention. Companies that retain profits for future growth are committed to expansion and innovation. This is an important factor for long-term investors. Finally, the capital management. Effective capital management maximizes shareholder earnings and returns. It's all about how well a company allocates its resources. Now that we've covered these indicators, let's talk about how analysts use them in practice. Analysts assess the overall health of the industry in which a company operates. A strong industry can positively influence a company's prospects. Understanding the competitive landscape is crucial. Companies with a sustainable competitive advantage often perform well. The management team plays a pivotal role in a company's success. Analysts assess their effectiveness and decision-making. Analysts dive deep into financial data, looking at income, revenue, and growth potential. This data helps them evaluate a company's financial health. Let's illustrate this concept with an analogy. Imagine the stock market as a bustling shopping mall where stock items are on sale in various stores. These stocks, like the products in the mall, are the main focus. In this analogy, the shoppers represent the general investing public, often seen as emotional and unpredictable crowd with limited insight into the true value of the goods for sale. In contrast, fundamental analysts navigate the mall deliberately, hunting for the best bargains. They patiently observe which items the crowd moves away from, such as personal computers or PCs, and then carefully examine those overlooked items. fundamental analysts might attempt to assess the PC's intrinsic value, equivalent to determining a company's book value or liquidation price. They also scrutinize the quality of the PC, its durability and longevity. This involves studying specifications, manufacturer warranties, and consumer reports, mirroring how equity analysts assess a company's financial stability via its balance sheet. Next, these analysts delve into the PC's performance aspects, such as processing power, memory, or image resolution. These are akin to analyzing forecasted earnings and dividends from a company's income statement. Ultimately, fundamental analysts gather all this data to calculate the intrinsic value independent of the current sale price. If the calculated intrinsic value exceeds the sale price, fundamentalists consider buying the PCs or stocks. Otherwise, they may either sell the PCs they already own or wait for prices to drop before making new purchases. Special considerations. Conducting fundamental analysis can be a demanding endeavor, and this aspect arguably makes it appealing. The diligence required to delve into a company's financial records and assess its future potential empowers investors to recognize instances when a stock's price doesn't align with its actual value. These meticulous investors possess the skill to identify the market's misjudgments, creating opportunities for profitable investments. Simultaneously, investing in companies based on their intrinsic long-term worth shields investors from the pitfalls of day-to-day market fluctuations. Nonetheless, it's essential to realize that even if the fundamental analysis indicates a stock is undervalued, it doesn't guarantee an immediate correction to its intrinsic value. The reality is more complex. The actual behavior of share prices continually challenges the rationale behind nearly every stock holding. Even the most independent-minded investor can question fundamental analysis merits. There is no magic formula for pinpointing intrinsic value. In a booming stock market, it's easy for investors to deceive themselves into thinking they possess a talent for selecting winning stocks. However, when the market takes a downturn and the future looks uncertain, luck alone won't suffice. Investors must truly understand what they're doing to navigate these challenging times successfully. Fundamental analysis versus technical analysis. While fundamental analysis primarily revolves around assessing a stock's inherent worth, technical analysis is exclusively focused on examining a stock's trading history and price movements. It examines trading signals and employs various analytical tools to gauge a stock's strengths or weaknesses. Technical analysts believe that a stock's past performance, its historical price trends, and trading activity can provide insights into its future direction. Essentially, the foundation of technical analysis rests on the premise that price movements are not random. Instead, it asserts that identifiable patterns and trends emerge and recur over time. To illustrate this difference, let's revisit the previous analogy. Technical analysts pay little attention to the products on sale. Instead, they closely observe the crowd's behavior to guide investment decisions. For instance, if a technical analyst observes a gathering of shoppers inside a computer store, they may purchase a significant number of personal computers or PCs, anticipating that the increasing demand will drive up PC prices. And there you have it, folks, the ins and outs of fundamental analysis, your compass in the complex investing world. We hope you found this video informative and that it empowered you to make more informed decisions in the stock market. If you enjoyed this video and want more content on finance, investing, and everything related to making your money work for you, don't forget to hit that like button and share it with your fellow investors. Thanks for tuning in! Check out more videos about stocks made simple and how the stock market works. These videos will guide you through the inner workings of the financial world, making it easy to understand. Until next time, see you in the next video.